Well, if you look at the typical groups of buyers, there's going to be the institutional investors and the the fund sources, the IPPs, the utilities as another group, the corporates, and then there's other groups that are moving into the space, which fall within there, but they're also sort of new. So big oil is increasingly developing thoughts on how it is they want to participate in the space going forward, given the increasing importance of it. The foreign money as well. It's in different ways we're seeing that move into the space too, and we're seeing an increasing influence. It's been around for a while, certainly not new, but the volume of financial institutions that have sustainability objectives from the U.S. market and other markets that are looking to participate in the space is certainly growing. You wind up with more maturity in terms of the competition. And the other areas with investors in what I consider sort of tangential but similar spaces, and that can be people who have focused on the real estate in the past, and can be many similarities with how it's looked at from a clean energy perspective. Those that have participated in areas such as telecom, it's interesting because there's been a lot of similarities in terms of the way that clean energy is quickly evolving and maturing to what happened in telecom sort of 20 years ago. And so you see a lot of the folks that have evolved from that sort of matured space into this matured space. Utility networks and telecom networks are very similar in terms of their transportation highways for either information or energy. A lot of the constraint points have similar issues. The evolution of the regulations has been an extremely important driver. Technology change, declining prices, M&A because of consolidation. There's a tremendous amount of similarities. So you wind up seeing, frankly, some participants move across to the clean energy space as well. The institutional investors, low cost of capital, seeking sort of very willing to take sort of very nominal returns and deploy capital in different ways. We're seeing this with the purchase out of yieldco portfolios. There's been several announced even over the last week that are very substantial, where they're buying into the space. The split up between the platforms for developing assets and then the operating assets has also been an increasing trend as parties try to break out the different elements of really risk and opportunity within the portfolios, so that it creates the different ways to take advantage of the assets that have been developed. So those tend to be ways that it's evolving, but this is really happening across the spectrum as the space continues to mature.